Good morning everybody, welcome back to another Chart Nerd TA video. We're going to be diving back into Algorand today, looking at the weekly time frame. Now I do cover this project a lot. Every time I see something new, I just want to go over it with you guys and show you some sort of confluence. Today we're going to be looking at something very similar that occurred back here in December 2019 for Algorand, where it had this pump up and, you know, met the 20-week EMA and got rejected and put in its low back in March 2020 during the COVID dump, and this was a massive 96% correction. Now if you fast forward to where we are in the bear market today, you can see Algorand from its all-time high was currently down around 94%. So, you know, 2% shy of retracing back down to this March 2020 low. Now what I wanted to point out was these patterns here. So we've got this right angle broadening wedge here that occurred for Algorand, where it kind of had a little overshoot above the weekly 20, and then you put in the low for Algorand here at 15 cents. Now if you look back over to where we was under the EMAs here in the bear market in 2019, you can see that Algorand had a similar sort of pattern, not something exactly the same, but we had this sort of level of support here and this level of resistance. So it was I wouldn't say exactly a right angled broadening wedge, an ascending broadening wedge, but you was putting in higher highs over a period of time and holding a level of support, just like we have or was doing back here from May all the way till November, where you was putting in higher highs, okay, and he was holding this level of support. Now once this level of support was lost, this is where Algorand put in its low in March, and since then it never looked back. Okay, it shot up, it never looked back from that point on there where you had the COVID crash. Now if you fast forward and we can measure these targets, this is again another bit of confluence here. We're going to use these methods to measure these targets too. So what we would have done, we would have gone from there to there, and you can see that once it lost that neckline of support, boom, technical target met. Again, as I said, once you started to get back above the EMAs and holding them as support here, you created a bullish cross in January 2021. You never look back for Algorand, okay? Now, if you fast forward to where we are here, again, if we look at the target, we go from there to there. You can see that this target has just been met, a little bit more overextended to the downside, but this right angled broadening ascending wedge target has been met, and again right now you're rallying up to the EMAs. So I think we're doing something very similar that we've done in the past here for Algorand. Okay, so again, let me just get these trend lines back on. And what occurred at this point as well is quite fascinating to see what actually happened, because back here as well, Algorand had the overshoot and the closes above the weekly 20 in February. Now you can see we had the overshoot and the closes in November this year in regards to the similar pattern, and that confirmed, okay, boom, once you lost support, technical target met. So you had the overshoot here during this bear market, you lost support, target confirmed, boom, okay, and then since then you broke above the 20, you hovered above the 20, ascending support, ascending triangle, broke out and started to close and move really impulsive here. So could we see the likes of something similar where we've coming up to the 20, you know, coil up for the 20 for a couple of weeks, hold support and start to melt on up to this weekly 55 EMA, just as we did here, and we absolutely melted through it. So could we see something very similar for Algorand here, and then you come back for a retracement back to the breakout? So if you used to start to come back for a retracement back to the breakout, then you're starting to, do you know what I mean? You're starting to look very impulsive, and this was a low, this is a high, this is a higher low, and right now Algorand is starting its large impulsive move to create a higher high, and you're in this larger scale bullish structure here. It's a very, 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 very big potential. But I just wanted to point out those two similarities there, both during two consecutive bear markets for Algorand. Okay, so you had this ascending broadening wedge, closed above the 20, bull trap, crash. Okay, you had this ascending broadening wedge, closed above the 20, bull crash, trap. Okay, and you put in the lows, and you've met the technical targets. And again, this was the COVID dump. This was the FTX crash. Do you see what I mean? So put the two and two together again, and this is why you're getting these. You had this V-shaped recovery in COVID. Right now, you're getting this V-shaped recovery after the FTX crash as well. So again, there's a lot at hand here. Now, if we do compare a little bit closer, you know, looking at this 20-week EMA, as I said, you can see that you hovered around this 20-week EMA and built an ascending level of support here when you did start recovering back in 2020. Okay, so you had multiple closes below it, and then you melted through it, back tested the 20 EMA for support, and never looked back. Okay, so similarly, we could be doing the same thing here. We could be meeting this 20 and previous previous support of the ascending triangle, target met, running back into that as resistance, coil up around the 20 for a little while, build up this ascending level of support potentially. I'm going to look for retracement targets in a second, and then start to absolutely melt and retrace back to this 45 cent. At the same time, this 55 EMA is closing down. If you do start to see multiple closes above this weekly 20 EMA here for Algorand, I think that confirms that your next target is that 55 and retracing back to this 45 cent mark for Algorand. Okay, because it does look like we're playing a rinse repeat here. At this point, you had very big gaps between the EMAs, you drew back up to them. This point, you've got very big gaps to the EMAs, you're drawing back up to them. It's literally a rinse repeat staring at us in the face. It's crazy. So again, if something like this is to occur, again, it's all a thought experiment, just like we did here. Higher lows, okay, you built up over time. Right now, if we do see resistance at this 20 and start to coil up, I would be expecting some potential sort of higher low structure here for Algorand, where you're just building up a foundation over time, coil up. Once you break out and start to close and confirm above, you're going to be looking at higher targets, aren't you? Okay, and retracing back to that 45 cent. So again, in the near short term, I am looking for a retracement. I do think we could potentially be a bit choppy here over the next couple of weeks, unless we see Algorand absolutely melt through this resistance and retrace up to this point, at which I would expect a larger correction if that was to occur. And it's a large possibility. If you start to see the clean breakout here and holding above relatively quick in the next couple of weeks, we could come back up to this 45 cent range relatively fast. Okay, but again, we do have levels of resistance above us, and this is why I think, again, you've got this previous support that is now resistance, V-shaped recovery. I think coiling up around this area, looking for a breakout and building some sort of foundation over the next few weeks to couple of months would be a great opportunity for Algo to build a foundation. So potentially, if we have run into resistance at this weekly 20 and we do fail to break above it, and we do look for higher lows to coil up very similarly to how we did here, where you got this level of resistance, you coiled up and then you broke out, you got this level of resistance right here. If we can come back and hold support here on the golden ratio, start to coil up, work our way up, you know, and just put in this higher low structure, again, you're forming something very similar as we did back here under the EMAs, where you started to get back above the 20. Okay, so you're under the EMAs and eventually start to get back above this 20 as it curls up. Okay, and you're starting to drag this 55 up. At this point, you break out and then you run up to the 55. I think this is what Algorand's looking to do. So how we could get some good targets here. So the 20 cent area, I've said in previous videos, is where I'm looking for support between 20 and 19 cents. If we do fail to close above this weekly 20 this week, I would be looking for some pullbacks to those areas. Okay, holding support and building up, again, that ascending structure. Now, if we was to break out, we do need to see ourselves close above the 050 and 0618 on this retracement. So again, right now, why I'm expecting a pullback is because we've run into 27 cents. That was my target. You've come back up to this resistance line that was previously support of that broadening wedge, and right now I think you are looking for that 20% pullback back to 20 cents. So that's not to say that we can't hover around here for a little while before we do pull back. Okay, it all depends on what Bitcoin does at the same time, but you know, that for me is what I think is likely to occur. Again, nothing that I say is financial advice. It's all for educational entertainment purposes only. But if we do start to get back above and start closing above this golden ratio and this golden pocket and holding that as support, I think that's even more bullish for the fact that you're going to start retracing to this 1 fib and this 45 cent mark back up here for Algorand that we hit in November. Now, it's very interesting what occurs at that point, because again, that would be very, very strong resistance. And I do think Algorand would potentially have some pullback. But for me, in the near future, in the near short term, I do think Algorand is potentially trying to... It's literally a game of support and resistance. Right now, you lost the support, you've turned it to resistance. We need to see support held on the retracement back to this 15 cent low, and that will confirm that we're looking for the breakout of this uptrend, as I keep saying, guys, and you do form some sort of ascending triangle under this resistance point. And then if you break out the ascending triangle, okay, which could be from there to there, you can see that the target runs you straight back up to this resistance point of 45 cents again. So again, guys, it's all about creating a foundational level of support, higher lows right here, breaking out of this 27 cent range and attacking the 45, and that would be the next target for me again, which would be the 55 weekly EMA as that's coming down on our heads. So again, I think we're looking very, very bullish here. I think potentially this is a large wave 1. You could have an ABC wave 2 pullback for a wave 3 breakout, a wave 4 pullback, looking for a wave 5, okay, and this could be a larger macro wave scale 1 coming back for support, and again we'll have even more targets retracing back to these all-time highs if the lows are in for algo here. So I hope you did enjoy the content today, guys. Please do like, comment and subscribe, hit that notification bell for my next videos. From Chart Nerd TA, take care, peace out.